Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today we're going to start with the increase in downside momentum and the lack of follow through in the broader market. Then I'll show you some ETF rankings that show energy and banks are leading. And then we'll look at technology, communication services, and industrials because they are weighing on the broader market. So we're going to start off by looking at RSI. And a lot of people use RSI to identify overbought and oversold levels during uptrends and downtrends. And I'm going to show you how to use RSI to help quantify the direction of the trend. And what I've got here is I've just got a basic line chart for the S&P 500 and the 200-day moving average. And I've got RSI in the indicator window. And we're going to talk about RSI ranges. Now, this is just a sharp chart. And I've got lines at 35 on the low end. And then just below is 30, typical oversold. And then 65 on the upper end. And basically, when you go below 35, that shows a lot of strong downside momentum, and that can be bearish. And when you go above 65, as you did in early June, that shows a lot of strong upside momentum, and that can be bullish. That can signal the start of an extended uptrend. And I'm going to switch over to Stock Charts ACP because I can show that better because I can set the levels to turn the indicator green when it goes above 65 and red when it goes below 35. So here's a line chart of the S&P 500 on Stock Charts ACP. And what I want to show you is this decline that we had here in September has been the steepest decline in momentum terms since this whole advance began off of that March 2020 low. It was even steeper than these two declines that we had here in September 2020 and October 2020 for that matter. And I'll show you that using RSI. So this RSI range indicator is part of the Trend Investor Pro Indicator Edge plugin. And if you go down to the bottom right, you click the plugin icon, and there you can see the plugins that are available, and you can click on that to learn more about it. And so now I'm going to go to the upper left corner and I'm going to open up the chart settings and I'm going to scroll down to the plugin options, and there are the indicators available, and I'm going to select RSI trend range. Now the default settings are 65 periods for RSI, a 5-period smoothing, 51 for the upper line, and 49 for the lower line. So let's see what that looks like. So I'm going to go ahead and close that up and then open this a little bit. So we can see here that as far as this setting is concerned, we got an uptrend signaled. Get the crosshairs on there so we can get it exactly right on May 28th. And we got a downtrend signaled on the 28th of February, just before the COVID crash there. So that was pretty timely. And some of the uptrend signals can lag. This is a trend following indicator. But 65 days is getting to be around 3 months, and you're smoothing it. So you take out some of the whipsaws with that 5-day moving average. And so this indicator is still bullish. But I'm going to change the settings to make it a little more sensitive. And so go up here. I'm going to change these settings here. I'm going to just go 14-period RSI. I'm going to take off the smoothing. And I'm going to put my upper reference at 65, my lower reference at 35, and I'm going to close. And so now we can see how that looks on the chart. And I'm going to take off the crosshairs here. So you can see it turns green when you get above 65, and that shows strong upside momentum. And then it turns red when it goes below 35, and that shows strong downside momentum. Now, this is not a new concept. Andrew Cardwell, who does an RSI course, he wrote about RSI ranges. He typically thought 40 to 80 was the bull range and 20 to 60 was the bear range. I like to give it a little bit more of a buffer and go to that 35, 65 level. Get above 60, show me some strong buying pressure. You can even use 70, but the problem with 70 is you don't get above 70 very often. So it also depends on the ETF or the stock that you're using, because they have different volatilities and different characteristics. But if we just use the S&P 500 here and 14-period RSI, you can see that during this uptrend, you got started here in late May, early June, when you got above 65. And we haven't dipped below 35 during this entire advance until September 21st. So we got a dip below 35, and we got one here on September 30th. So 2 dips below 35. That shows some pretty strong downside momentum, and that is the most downside momentum we've seen since the advance began. So that kind of tells me we're in some sort of a correction mode, because my longer-term trend indicators like RSI 65, I showed you before, are still in bull mode. So we don't know if this will turn into a bear market. I don't think so, but I'll take the signal if it comes. But right now I consider it a correction within a bigger uptrend. Now here's a different version of the same indicator on Amy Broker. I'm using Amy Broker now. You can see RSI turning green when it gets above 65, and then turning red when it goes below 35. And now we're going back to 2018. But you can see here that we get the red arrows. That's when RSI goes below 35. And that gave you a forewarning of the correction in the third quarter of 2018. And then you got bullish here in January, February 2019. A couple of pullbacks along the way. Caught this uptrend here when you got above 65. Trend following signals are always going to lag. Okay, that's just the way they work. And then you would have avoided the COVID crash and gotten in after the rebound. But look at all these occurrences when we got above 65, all those green arrows, continuously getting above 65. And now you can see we're not getting above 65 and we're pushing below 35. So we've got some downside momentum taking over right now. So the problem right now is we're not getting any follow through to these bounces, and that's why the correction is continuing. So we had a big decline here on September 20th, and that pushed the Zweig breadth thrust indicator below 0.40. That shows some strong downside participation. And we got an oversold bounce, but no follow through, and we continued down. Then we got another bounce, but again, no follow through. And that's what this market is lacking right now, follow through with strong breadth, because we need the Zweig breadth thrust indicator to move above 0.61 to get a bullish signal. So we've still got this downtrend in force short term. Maybe it's a channel or a wedge. We're still in a long-term uptrend, but we've got this downtrend working, and we need to get follow through to this bounce and a breakout there at 440 to suggest that the S&P 500, SPY, is ending its correction and the bigger uptrend is resuming. So at trendinvestorpro.com, in addition to regular commentary with chart analysis and strategies, I also have a market regime page and a ranking trends and setups table for ETFs. And this market regime page is updated every week to tell us if we're in a bull or a bear market. And I've got a composite breadth model that has been back tested since 2003, and you can see the signals there. But basically, you get a lot lower drawdowns and you get a higher risk-adjusted return following this model. And if we look at the performance table where I'm ranking these ETFs by the Stoke Close indicator, we can see the leaders are associated with energy. Russia, oil and gas, XOP there, natural gas, FCG, DBE. We've also got agriculture, dry bulk shipping, frontier markets, the dollar. So it's a very diverse group up there. You don't see technology up there. You don't see industrials. We got some banks up there, but the technology sector is still the biggest sector, and it's not one of the leaders right now, and that's weighing on the market. So check out trendinvestorpro.com if you'd like to know more about our market regime, our ranking tables, and our strategies. So if you look at a chart for XLK, it's unsurprising that SPY is under pressure and correcting because XLK accounts for 27.5% of the S&P 500 SPY. XLC is around 11%. So you put those together and you got almost 39% of the S&P 500 locked up in two sectors. And then you can whittle that down to 10 stocks basically that are dominating the S&P 500. So if you look at XLK here, there it's correcting after a new high. And there's that bounce that we had, that big gap. Looked like we're getting a breakout, but look at those closes the last 4 days. Again, this is Wednesday, so we know where the close is, but we continue to close in the lower part of the day's range, so we're not getting follow through. So what we need to see some follow through and a breakout here to reverse this decline and signal an end to this correction. And I suggest it's a correction because, hey, we had a 52-week high a little over a month ago. So this is still a pullback within that bigger uptrend. If we look at XLC, which is another important part of the broader market, it's under pressure, of course, because of what's going on with Facebook, one of its bigger components. But there you can see this sharp decline, and it's just continuing. You know, you had a pop. It was one of the weaker pops, and you're already below that early October low. So this one remains under pressure, and we need to get a breakout there above that high from last week to reverse this slide. If we look outside of the tech sphere and look at something old school like, say, industrials, XLI, we can see that it didn't follow through either. And this is kind of the reason for broader concern. XLI peaked way back here in May. So it's got some lower highs working. It's also got some lower lows working. Now, you know, maybe it is a big falling channel after a monster advance, because if we back this out, my lines don't move with that. But basically, you look at the size of this advance, we're going to go all the way back to the COVID low. So we're going like 50 to 105. We pretty much doubled. And now look, we have this big correction, but we don't have any signs of a reversal. But what I do is I kind of look for the pattern within the pattern. So here we have this big downtrend that could be a correction after a massive advance. And then you got these swings within this downtrend. And so we tried to get a bounce last week, but fell back again. So now we've got a resistance level within this bigger downtrend to watch. And if we get a breakout here, that's going to be the early signal that I'm watching for that industrials are turning around. And if industrials can turn around, if we can see XLK break out of its wedge, then that's going to be a positive for the broader market. So those are a couple of things I'm watching going forward. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.